The following is a presentation of TFNN.
Let's go to our first call of the day. We'll talk to John in Austin, Texas. How you doing today, John?
Way too good, Ken. Appreciate what you're doing. You do such a great job. This show is fantastic every day.
You're a good man, John. Really appreciate it. Thank you.
Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Good afternoon, friends. Welcome to another edition of Breakout Investing on TFNN. Great to be with you. Ken Shreve is my name. The number to use is 877-927-6648. You can catch Breakout Investing 5 days a week on TFNN from 3 to 4 Eastern. You can get the show as a podcast on iTunes if you can't listen live, so feel free to head over there and leave a review if you so choose. And don't forget, you can listen to all TFNN programming these days on your smartphone. That's very easy to do. Just open your smartphone browser, type in tfnn.mobi, and you can listen to the stream that way as well. Don't forget about Tiger TV, a great feature at TFNN.com. Channel 1, the show is carried live. It is archived on Channel 13 with Tiger TV. Not only do you get the show audio, but you can also look at charts live right along with me. Tiger TV is also viewable on your handheld device, Android device, iPhone, whatever you have. The way to do that is open your smartphone browser, type in tfnn.com, and then over on the top right-hand side of the page, you'll see a little box with some handheld, cell phones in there. Just click that box, and Tiger TV will start streaming on your cell phone. Just got done watching the White House press conference where President Obama nominated Mary Jo White to head the Securities and Exchange Commission. She looks like a tough lady, 65 years old, was involved in the prosecution of mobster John Gotti, and also is very experienced prosecuting white-collar crime, securities fraud crime. So seems like a logical nomination to the SEC. Certainly the Securities and Exchange Commission has a lot of work ahead of it. Unfortunately, a very small staff to deal with a lot of issues that Wall Street is having to deal with right now. Taking a look at the market here. Let's start by taking a look at the NASDAQ 100, because this is the index under the most pressure today. Headed into today, Apple was about a 15% weighting in the NASDAQ 100. We'll see that this tech index is down 1.3% today to 2726. You can see pretty major support here at the 2670 level here. That's where the 50 and 200-day moving average is, but still holding above some recent lows here. So tell you what, 1.3% decline for the NASDAQ. Pretty solid, considering that shares of Apple are down close to 12%. At near its session low, trading at 453.05. We'll get into Apple's earnings report in just a little while, but let's check in on all the major averages here, starting with the NASDAQ Composite. You think tech stocks would be under a lot of pressure. They're under pressure today. It's definitely the lagging index out of the Dow and the S&P 500. But overall, not too bad here. NASDAQ Composite down about 22 points, trading in the bottom half of its range, down 0.7% to 31.31. And the S&P 500, let's see, check on the S&P 500 here. We'll see that it is trading just almost in the midway point of its range today, maybe slightly in the bottom half, but S&P 500 bucking the trend here, up a fraction to 1495, and the Dow finally, at last check, was also in positive territory. Look at the Dow working on 5 straight gains here. Nice little breakout for the blue chip index in recent days. It is up 49 points to 13,828. Checking in on volume. We always like to do that. A lot of volume in the NASDAQ today. course, NASDAQ skewing that a little bit. But yesterday on the NASDAQ, we saw 1.66 billion shares. That's pretty much what the NASDAQ trades on a normal day, 1.66 billion. We're tracking about 20% higher than that today. Volume on the New York Stock Exchange yesterday was below average. It's been pretty light for a while now, but yesterday below average at 636 million shares. We're tracking about 5% higher than that today. Very quiet week of economic data today. We did get weekly jobless claims. Pretty good reading, actually. Down 5,000 to 330,000. That's the fewest since January 2008. So lowest in about 5 years. The estimate was for claims to increase 20,000 to 355,000. So much better than expected data there. Tomorrow, the only thing on the docket is new home sales for December. They're expected to rise 2.7% from November to 387,000 units. Home builders, continue to show relative price strength in the market, and you can see here the ITB. Probably the most liquid housing ETF. It is trading near its session low after early strength, still working on 5 straight up days here. ITB up 5 cents to 23.20. Looking a little bit extended here after a recent breakout over 21.5. The ITB is the pure play home building ETF. There's another housing ETF out there, which would be the XHB, the Spider S&B Home Builders Index. It has a few housing stocks or a few home builders in there, but it's got a lot of other kind of housing-related plays. So the XHB is not a pure play home builder fund. Similar setup to the ITB. XHB today is up 26 cents, 0.9% gain to 28.79. The breakout here was over 27 in early January. So both of these ETFs are a bit extended here. Probably want to wait for a pullback if you're thinking about buying them. All right, let's check in on Apple here. We just looked at Apple's chart, kind of go through its earnings report. The lesson here, if you've been listening to the show for any amount of time, and I'm not the only one that's been, pounding the table negative on Apple. This is a stock that's been under distribution since October, and the question is why? And what I've been saying incessantly is that when a stock goes through a distribution phase, an extended distribution phase, it is usually because of concerns about slowing growth ahead. It's usually something fundamental related. When you get a big price decline like Apple has seen, you have a stock that clearly is being dumped by institutional investors, growth fund managers out there that are certainly much less enamored with Apple's growth story as they were in, say in 2008, 2009, 2010, etc., when Apple was growing earnings rapidly. So the handwriting was on the wall here. We owned Apple in the Ultimate Growth Stocks model portfolio. We bought the stock. Let's see, we sold in October. I think we bought in August, or maybe even late August, early September. I want to say, no, it was, let's see, July or August, something like that. Anyway, we bought it around 620, something like that, and then it ran up to 700, and then we decided to cut ties with the stock right around $670 a share back in early October, when we first started to see signs of technical weakness. Never went back to the stock, and in hindsight, that was the right thing to do. Shares of Apple again down close to 12% today to 453.45. We'll pull up a weekly chart here for Apple, and what we see here is a pretty good visual about where support could be, and that looks to be right around its last breakout area around 425. So Apple's got another 25-30 points to get down there, but not uncommon for a stock to to eventually pay a visit to a prior breakout area like this. In Apple's case, that's $4.25. Okay, the numbers. Earnings were basically flat from a year ago. They made $13.81 a share. The estimate was for $13.41, so a decent bottom line beat there. Sales up 18% to $54.5 billion. The estimate was for $54.7, so just a hair below estimates there. Gross profit margin was a little better than expected at 38.6% in the latest quarter. That was down from 44% margin a year ago and 40% margin in the prior quarter, which was its fiscal fourth quarter. So margin deceleration going on at Apple. Company sold 47.8 million iPhones in the quarter, up 29% from a year ago. Sold 22.9 million iPads, up 48% from a year ago. So decent growth, and those iPhone and iPad numbers were they weren't terrible. They were mostly in line with expectations. But I know Gene Munster was one of the more influential Apple analyst was hoping, for iPhone unit sales of at least 50 million. So a little bit light there. iPhone accounted for 52% of total Apple revenue in its fiscal first quarter. iPads made up 19% of total sales. So all in all, this has been a broken stock for a while. We'll see what happens. It looks like a trip down to 425 is likely, but I just don't see meaningful upside for this stock. We'll probably get some dead cat bounces here. That 523 level, its 10-week moving average, is likely going to be a significant resistance level. You can see it's been a significant resistance level for several weeks now. Back in October, November, tried to get back above there, failed. Tried to get back up, just a few weeks ago, failed. This is a story of just fund ownership that is leaving the stock and is probably not going to come back in the near term. Today, Jefferies and Company cut Apple to hold from buy and cut its share price. They initially had an $800 share price. They knocked it all the way down to $500. So they cut the share target price by $300. Let's take a look at Cirrus, C-R-U-S, Cirrus Logic. They're coming out with earnings after the close today. This is a company that gets more than half of its revenue from Apple. They do audio chips for the iPhone and the iPad. You're going to look at the bottom line and top line growth at Cirrus, and it is going to be very, very good. But that is what is expected. They're supposed to earn $1.41 a share, up 228% from a year ago. Sales up 134% to $286 million. But look at Cirrus. I mean, this is a stock that is in the same kind of situation as Apple, a stock that can't get out of its own way in a nasty downtrend. Buying demand has completely dried up here like it has in Apple. So it'll be interesting to see how Cirrus trades when it reports after the close. Not a stock I'm interested in owning here. Shares of Cirrus Logic down 10% today to $26.93. So weak technicals for Cirrus Logic ahead of earnings. Busy show ahead, folks. We've got a lot of earnings reports to get to. We'll continue to give my overall take on the market here. Stick with me headed into break number one here. Ken Shreve with you. Breakout Investing on TFNN. We'll be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
TFNN is proud to partner with Great Panther Silver for another exciting silver coin giveaway. The Great Panther Silver Super Silver Giveaway begins the week of January 28th and we'll be choosing 47 lucky winners. It's free to enter with absolutely no strings attached. Just visit the front page of TFNN.com today to fill out your entry form. Every hour that we're on the air, 9 a.m. to 6 p.m. the week of January 28th, we'll be randomly choosing one lucky winner that will win a silver coin or bar from Great Panther Silver and TFNN. And the final hour of the week, Friday, February 1st, we'll choose 3 lucky winners. That's 47 winners in just 1 week with over $1,000 in silver given away to our loyal listeners. Register today by visiting the front page of TFNN.com. And for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex symbol GPL or on the Toronto Stock Exchange symbol GPR.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN. Ken Shreve with you. Let's take a look at the 10-year note today at 1.84%. We've got a little chart of the 10-year yield here. So up a little bit from yesterday's close, but 10-year note at 1.84%. The 30-year bond also higher to 3.04%. U.S. dollar index today, not much movement. Closed Wednesday at 79.92. Last I saw trading at 79.94, up a couple of ticks. February gold today dropped $16.80, 1% decline, to settle at $1,669.90 an ounce. And after 7 straight up days, March silver gave back 72 cents. That was about a 2% decline for silver, settles at $31.72 an ounce. March crude oil up 72 cents to $95.95 a barrel earlier today. U.S. Energy Information Administration, otherwise known as the EIA, said that crude oil inventories rose by a larger than expected 2.8 million barrels. Gasoline stocks declined unexpectedly. So that is what is going on there. Let's take a look at these fertilizer stocks today. AGU came out with pretty good guidance before the open today. AGU, another stock that's extended here after a big move since the beginning of the year. AGU actually trading near its session low after early strength, still up 1.9% to 113.01, hit an intraday high of 115.08, but their guidance was pretty solid. They now see fourth quarter profit just above $2 a share. The consensus estimate was $1.73, so that's a pretty big earnings guidance raised there from Agrium. A lot of other fertilizer stocks today benefiting on the news. Mosaic, nice move today, little breakout over $60 a share. You had a kind of a breakout here over 57 back in late December, early January, but newfound strength in Mosaic today, breaks out over 60 in decent volume. Mosaic normally trades about 3 million shares a day. Right now, looks like volume at 2.5 million, so heavy early, but volume has kind of trailed off in Mosaic. CF Industries also on the move today on this raised guidance from Agrium. CF Industries extending gains. The breakout here was over, I'll say 218 or so. So CF Industries trading at 226.45, up 1.2% on the day. Just dealing with a lot of extended stocks out there at this point. That is a theme that we've been talking about in recent shows. You want to, be disciplined. Try not to force the issue here by chasing stocks. Rentech Nitrogen Partners, another fertilizer play here. Kind of a not so great a day of trading for RNF. One would think this would have participated on the Agrium raised guidance, but RNF down 3.3% today to 44.81. We talked yesterday about the big move in the IYT transportation ETF. This thing is really looking parabolic at this point. IYT is up another 1.7% today to 104.23. Mentioned some of the top holdings in the IYT. 3 of the top 5 holdings are railroad stocks: Kansas City Southern, Norfolk Southern. We recently heard from both of those companies over the past couple days. They reported earnings. We heard from Union Pacific as well today. It was either after the close yesterday or early today, but Union, no, it's not, that's Unilever, UNP. There's Union Pacific, all right. So Union Pacific up big yesterday. Kind of a wild day of trading for the stock. Today down 74 cents to 134.61. Kind of a wild intraday trading range here for a supposed liquid stock like UNP. But they came out with numbers. Earnings were up 10% to $2.19 a share. That was 3 cents better than the consensus estimate. Sales up 3% to $5.25 billion, slightly below expectations. Also wanted to take a look at Netflix. It's funny, in after-hours trading yesterday, you had Netflix start things off. The stock just blows through the roof here. You can see, a 41.6% move today for Netflix. Utterly amazing. Last trading at 146.20. We'll talk about Netflix when we come back, folks. Do you know that Netflix at one point corrected 80% off its all-time high? This stock was left for dead. Credit to Reed Hastings for an excellent earnings report, and it looks like this company has turned the corner. We'll be right back, folks.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, everyone. Let's check in on the markets here. We've got about 25 minutes left to go in Thursday's session here. Tech stocks lagging because of weak earnings from Apple after the close yesterday, but the Dow hanging in there pretty good, up 65.5 points to 13,844. Nasdaq Composite down close to 18 points. That's a 0.6% decline to 3135. And finally, the S&P 500 up a little more than 2 points to 1497. 1497 last on the S&P 500. All right. Let's keep moving along here. We talked about earnings from Union Pacific. Yeah, I wanted to, first of all, before we talk about Netflix, I wanted to just to show you a monthly chart here for Netflix, NFLX. And if you're watching in Tiger TV, you'll see the tremendous pullback that this stock made from $300 basically down to $50. So it came in about 80% off its high. And when a stock does that, it's very rare that it's able to successfully come back. But you can see over the past 4 months the move that Netflix has made. And really credit to Carl Icahn, because he, back in September, I believe it was, he took a 10% stake in Netflix when Netflix was trading around $58 a share. So it's been a extremely lucrative trade for Carl Icahn. But Netflix, they were supposed to lose 13 cents a share. They actually made 13 cents. So it was a big beat on the bottom line. Sales were up 8% to $945.2 million. That was about $10 or $11 million above the consensus estimate. Some other metrics here. They added 2 million video streaming subscribers in the U.S. in the fourth quarter. Domestic online customers now total 27.2 million. In December last month, Netflix announced a licensing deal with Disney for exclusive streaming rights to Disney movies beginning in 2016. And probably a little bit of short covering here, but you have to keep in mind that short interest has been actually on the decline at Netflix. At the end of October, there were 17.2 million shares held short. End of December, it had fallen to 13.2 million. So probably some short covering today, but a lot of shorts had already covered the position here. So just really an outstanding day for Netflix today. And really, I think Reed Hastings deserves a lot of credit, the CEO at this company, for they're back in growth mode, and they've got a great product that continue to see nice subscriber gains. Netflix performance reminds me a little bit of GMCR. Let's take a look at Green Mountain Coffee Roasters, because this was another company left for dead not that long ago, and lo and behold, look at it, it's trying to break out here over another swing point of 42, 43, something like that. 43.79 is the swing point. Shares of Green Mountain up 7.1% today to 43.98. Same situation here. We'll go and just get a monthly chart view here. For GMCR, we talked about the fact that Netflix pulled back about 80% off its high, and this is a monthly chart again, and it was an equally steep pullback for GMCR, where it fell about 85% off its high here back in 2011. It goes underneath $20 a share, but it has been in rally mode as well. So nice move for Green Mountain Coffee. Earnings here due February 6th, I believe, is the earnings date, so not too far away. Earnings expected to be up 8% to 65 cents a share. Sales up 15% to $1.33 billion. So Green Mountain is another company out here where I would not be surprised to see decent earnings. The last time they reported earnings in the third quarter, it was I think the stock did very, very well, and it was a quarter that turned a lot of heads, because it was a quarter that revealed strong growth. Their earnings were up 36%, a nice acceleration in revenue growth. Revenues were up better than 30% to about $950 million. So we'll see if Green Mountain can keep its upward trajectory going. Other earnings reports today to take a look at: Western Digital. Disk drive makers seeing better demand. Western Digital has been really a monster move since early December, when it was trading around $36 a share. Last trading at $47.96, up about 1.9% on the day. Earnings up 38% to $2.09. That was well above the consensus estimate of $1.82. Year-over-year sales growth up 92% to $3.82 billion. Estimate $3.68. So good beat on the bottom line and top line for Western Digital. The company shipped 59.2 million hard drives in the quarter. That is more than double the 28.5 million it shipped in the same period a year ago. So nice numbers from Western Digital. And how about F5 Networks? Nice gap above the 200-day moving average for F5, trading in the bottom half of its range. Seeing a lot of stocks here trading well off their highs as we head into the close here, but F5 still up about 5% to 103.79. You see F5's networks in a lot of these big data centers. Earnings were up 11% to $1.14, a penny below. Sales up 13% to $365.5 million. That was also slightly below expectations, but the company's got a lot of new products in the pipeline. F5 said it's expecting to see re-accelerating revenue growth as a result of this new product ramp up by mid-2013. So investors like the sound of that. United Rentals said they were going to deliver strong growth, and they did. Kind of a bearish day for the stock here, though. Classic outside day forming here for United Rentals, where its intraday high and intraday low far exceeds that of the prior session. Right now, URI down 15 cents to 49.28. This is a company that provides construction, industrial equipment rentals. Really nice growth here. Earnings up 55% to $1.27. 6 cents above the consensus estimate. Sales up 67% to $1.25 billion. That was mostly in line with expectations. Their sales guidance for 2013 left a little bit to be desired. They're looking for total sales between 4.9 and 5.1 billion. Estimates were close to 5.2 billion. So not a great day of trading for United Rentals, and this is a situation where if you've been long this stock for a while and you've got a nice cushion and you see a day of trading like this, a volatile outside day in very, very heavy volume, there's nothing wrong at all with taking some money off the table here. I would also say the same with Chihu 360 Technology. Kind of a bearish day for this stock as well. Has been a very, very solid performer. You had an initial breakout over 24. You had another breakout over 28, but another outside day here. After early strength, it has reversed down 2.3% to 31.88. So same situation. If you've got profit in Chihu 360, nothing wrong with taking a little bit off the table, or even taking full profits. Depends on what your time frame is, but you want to recognize bearish price action when you see it in a stock. One day of bearish price action doesn't mean a stock's about to fall apart, but it can help you when deciding whether or not to lighten your exposure in a specific stock. Varian Medical, VAR, also heard from this company. They make oncology equipment used in radiation therapy, and kind of a wild day for Varian Medical. Hits an intraday low of 69.52, has recouped all of its losses, still trading lower because it gapped down, but it is back above its 50-day moving average, still down 2.5% to 73.07. Kind of a wild day. A lot of these liquid stocks, I mean, the volatility is just is hard to believe in some cases, because you expect stocks that trade a lot of shares each day. You wouldn't expect these big wide intraday trading ranges, but hey, that's market volatility for you, and a market that hey, the machines are out there, no doubt about it. So there's fast-moving markets can be very volatile markets. But Varian, the numbers not too bad. They beat the consensus estimate by a penny, with earnings up 13% from a year ago. Sales up 8%, mostly in line at $678.4 million. So lots of earnings reports this week and next week. Brunswick Corporation, BC, bullish move here, but what are we talking about? This is another stock that's very extended here, up 7.3%. Impressive move for Brunswick. Last trading at 35.20. This is basically call it a recreation products company. They do boats, they do inboard engines, outboard engines, fitness equipment. They're in bowling and billiards, but got to give the company credit. Big breakout in early January here, but very extended. They I don't have their I have their estimates, but I don't have their numbers here. But I can get it super quick. Yeah, they made 2 cents a share, excluding items. That was much better than the consensus estimate for a loss of 8 cents. Revenue is supposed to come in around $849 million. A little bit light there. They came in, looks like $830 million. That is not keeping buyers away from the stock today, though. Again, Brunswick outperforming nicely, up 7.3%. Take a look at Research in Motion. The BlackBerry 10 going to be launching pretty soon, January 30th. Research in Motion hits an intraday low of 1633, now trading at 1786. Again, launch of BlackBerry 10 on January 30th. That's coming right up pretty quickly. Interesting interview at Bloomberg today where the chief financial officer at Lenovo, which is based in China, said that the company is considering a variety of takeover targets and even mentioned RIMs. So some takeover chatter here. Wouldn't put too much stock in it, but Research in Motion recovering nicely off its lows. And then, I mentioned yesterday IBB, the biotech ETF here, at one point looked like it was ready to flirt with a breakout over a swing point of 147.37. This one is trading near its session low after early strength, only up 16 cents now to 144.67 after hitting an intraday high of 145.98. So we'll keep an eye on the biotech stocks here, even though there are some biotechs that are looking a bit vulnerable. CLG is not one of them. Celgene is... Well, they came out with earnings as well. We'll see. Celgene's been a monster performer, very extended up here, but they did report earnings. They made $1.32, a penny better than the consensus estimate. Sales came in pretty much in line at 1.45 billion. Not giving up much ground today, only down 42 cents to 97.80. But biotech stocks that are starting to look a little vulnerable here. Regeneron Pharmaceuticals, REGN, found support at its 50-day moving average back here in December, fell below it in January, rallied back, and is now flirting with a break below the 50-day line again. Regeneron starting to look a little tired here, and perhaps even more tired than Regeneron is Alexion Pharmaceuticals, ALXN. Very bearish day for the stock yesterday. Breaks below support, tried to rally back above support today. Is not having much luck. It is up 1.4% to 94.26, but that 95 level looks to be resistance for now. So biotech stocks definitely still worth watching here because, again, the IBB technically still looks okay, but always been a stock picker's market in the area of biotech, and I always like to focus on those that are making money, that not only have good top-line growth, but they're also very profitable. So names like Celgene, also Gilead Sciences, GILD, has been a very solid performer, holding above support here today, up 1.9% to 78.32. So there are a lot of great growth stories in biotech, but you want to avoid the common pitfall of buying the story. Make sure the balance sheet is strong. You always want to see relative price strength, but you always want to see profitability, good product pipeline, good top-line growth. Make sure it's the whole package. So Celgene and Gilead fit the bill there, definitely. Headed into the final break, folks. We'll check in on the markets one more time. Thanks, as always, for tuning in. You're listening to Breakout Investing on TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just 1 position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back. 5 minutes left to go in Thursday's session. Checking in on the NASDAQ Composite, down close to 22 points, 0.7% decline to 3132. Trading near its session low here. Not surprising, since shares of Apple just haven't been able to get anything going today. S&P 500 hanging in there pretty good. Actually working on, what is that, 7 straight gains? 1, 2, 3, 4, 7 straight gains. S&P trying to make it here. It's up fractionally, about a 0.5 point gain for the S&P 500 right now. to 1495, and the Dow Jones Industrial average outperforming today, up 45 points, working on 5 straight gains. And I'll tell you what, 5 straight gains, it looks like, for the Dow. 1, 2, 3, 4, 5, I think 10 out of the past 11 up sessions for the Dow. So very impressive performance by the blue chip index here. Overall, market acting pretty well, I have to say, considering that shares of Apple are getting hit very hard today. Last check, Apple now down 12.4%. Acceleration in selling into the close here, down $63.61 to $450.40. I knew plenty of people knew that there was a likelihood that Apple was going to go lower after earnings. I think the magnitude of today's decline probably caught a lot of people off guard. But again, the sell signals have been out there in Apple for quite some time. We exited Apple at 670 thereabouts in late September, early October, and never went back to the stock. So learning to recognize sell signals, learning to recognize unhealthy price action. Today for the Ultimate Growth Stocks model portfolio, we had to cut a new initiation loose because, frankly, price and volume trends over the past 2 sessions were terrible. I wouldn't have bought the stock if I had any idea that the stock would all of a sudden just start acting poorly. It had been acting great, and then, not a great day yesterday. Big sellers again in the stock today. Better to move on, admit the timing was wrong, keep losses small, and go find another one. So cutting losses, preserving capital, very important in today's fast-moving markets. But my general strategy when buying growth stocks, adding stocks to the Ultimate Growth Stocks model portfolio, looking for that combination of strong fundamentals and strong technicals in a market uptrend. With that type of focus, your winners are definitely going to outnumber your losers. So that's what's going on here. Let's take a look at Panera Bread. This one has been acting weak for some time, trying to rally back, but really just getting hammered today, down 3.5% to 155.24. Didn't see any news here, but you can see a series of lower highs for Panera. This one is looking more and more like a short here, looking like it's ready to roll over. You can see it's still flirting with a low here back in late December. Hasn't broken below that yet, but this is a stock that looks to me like it's under distribution. And then finally, Under Armour here under a lot of pressure today. It's top footwear executive Gene McCarthy spent a lot of time at Nike. He plans to resign from Under Armour after 3.5 years with the company. Shareholders don't like the sound of that. Under Armour down 3.7% to $45.93. After the close, more earnings. AT&T, Microsoft. We'll see what initial sales of its Windows 8 operating system, the Surface tablet, what does that look like? Starbucks also reports after the close as well. Coming up next, the Tom O'Brien Show. I will be back tomorrow, Friday, 3 o'clock Eastern. Another edition of Breakout Investing. Have a great day, folks.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.